Well, firstly, I think after a torrid year last year, there's still quite a bit of underheld positioning in equities. We're seeing it in underlying flow. So asset allocation, I think that needs to reassess, where the household is. But given you mentioned the UK, I just go back to the Bank of England's guidance. There was and the OBR's guidance. So really, 7 quarters of household real income declines expected. We didn't even get one. As soon as the Q4 numbers came through, we saw that household real incomes were actually expanding. So I think those entire growth curves need to readjust. Those entire discount curves need to readjust as well. But overall, it's all about positioning. And I think there still is quite a body of risk and waiting to get back into the market. It's not all rosy. There are other factors out there. China's probably not reopening or expanding as strongly as expected. But again, relative to where we were 6 months ago, I think the world is in a slightly better place.
Just on the UK specifically, though, you brought the Bank of England into this. So has the Bank of England got a communication problem? Hugh Pill got himself on the front pages of the papers talking about how households need to expect lower incomes and lower living standards effectively going forward. Not quite the messaging that reinforces the idea of a stable and strong central bank that is ultimately leading you to better days. What do you think that has done, if anything, to the way people think about their spending intentions going forward?
Well, without going too much into the political sphere, I still think the 2 aspects of central bank communications are important. Firstly, you need credibility on the forecasts, right? So going back to the real income side of things, they seem to have misjudged that things are expanding. So if they are expanding, then it leads to the second part of how you communicate households up ahead. There are ways to say it's important for not just for households, but also for corporates to anchor their expectations as well. So that is needed from the BOE. They will need to communicate that through their press conferences as well. But I do go back to the forecast. I think that's where some readjustment is needed. If they had known household incomes would be expanding, then maybe other forms of language would have changed a bit as well.
Geoffrey, we've got a lot of complex information to digest. Just give us a sense of how you're positioning in this type of market at this stage.
Well, right now, the asset class I like the most is still emerging markets. Emerging market, fixed income, emerging market equities. I go back to the area where there's just so little positioning, right now. Even if I look at our flows in Chinese corporate bonds, for example, still a very challenged environment, but our clients are no longer selling because there really isn't that much relative to weightings or relative to benchmark that they can liquidate at this point. Plus that the dollar is still relatively robust in terms of valuations. Now, I think is a good moment to revisit allocations into emerging markets with adequate hedging levels, of course. But if things get better, from here, both on the domestic side, both on the EM side and DM side, I think that's where you get the best risk reward.